Okay, this week's market outlook. Obviously, we'll start off with the summary, we'll go into the news events this week, then the individual currencies, and then we'll finish with technicals as usual. Last week's announcement on Thursday from Trump, where he essentially stated that negotiations are going well, has definitely turned the markets more optimistic over a deal in the Middle East. We've seen short-end yields soften across the board, notably in the US and Europe. We're also seeing gold make a sharp pivot due to fixed income dynamics. US oil closed below the 90 handle on Friday, and equities continue to make all-time highs. So the market is clearly running with this de-escalation narrative. Typically, the market fades Trump's announcements around a big deal being made with Iran. I mean, we can just look at the history and see the market has typically always faded this. However, this time, the markets definitely seem to have more conviction, evident from Thursday's reaction function and how it's kind of flipped the narrative on its head, so to speak, at least in the short term. So yeah, that's kind of the summary of last week and what we're expecting to take place this week. Now into the calendar. So this week we have ISM manufacturing PMI on the Monday, which is forecasted to slip by 10 basis points. We also have obviously prices and then employment, which comes within that report. On Tuesday, we have Europe's inflation print, which is forecasted to edge up by 30 basis points. And then we also have JOLTS, which will be quite interesting. Wednesday, we then have the Bank of Japan Governor Ueda's speech, and then services PMI out of the US, which is forecasted to stay pretty flat at 53.6. Still in expansionary territory, of course. Oh yeah, we also have GDP quarter on quarter coming out of Australia, which is forecasted to slow by 30 basis points, but nevertheless. Thursday, we then have Governor Bullock speaking. We also have Kent, so a good few RBA speeches. Inflation out of Switzerland, as well as unemployment. And then we've got Fed Daly speech in the evening. Then on Friday, we've got NFP out of the US, obviously first Friday of the month. And then we also have Canada's labour market report, which is looking like it should have improved a tiny bit. However, it doesn't change the fact that Canada's economy is super weak at the moment. So yeah, that's essentially the main events we're looking at for this week. Moving on to the currencies. So starting off with the dollar. I mean, we're neutral to bearish this week. And just because markets are pricing in a resolution in the Middle East, don't expect the dollar to start melting very aggressively. Yields remain above 4%, so we're still in hiking territory, indicating that markets are going to need to see a deal pretty soon before yields start to creep back up. And even if we do get a deal, the US economy is in a strong place at the moment with inflation extremely elevated, I believe 3.8% or something crazy like that. And then the labour market's doing all right on paper, which should all limit the downside in the US twos, in my opinion. Obviously, US oil closing below $90, which is the lowest we have seen in the last 2 months, does indicate that markets are moving towards a deal being priced in. And as long as US oil softens, yields will weaken off, and it will all contribute to dollar weakness. As mentioned, data-wise this week, we have ISM PMI, both manufacturing services, with consensus remaining flat, but still in expansionary territory, which could give us some pullbacks to get in for dollar downside. Institutionally, JP Morgan are neutral, UBS are short if the ceasefire progress materialises, basically the same as us, and the Bank of America sees FX rebalancing being actually net bearish for the dollar in the short term. So yeah, I mean, it's quite divided at the moment between the institutions, and for good reason. I mean, we're more on the neutral to bearish side. I think we can probably expect to see the DXY hold up its a nice range, which we will go over in the technicals. But yeah, neutral to bearish on the dollar this week. Doesn't mean we're not going to be trading it. We'll definitely be trading it. But yeah. Moving on to the pound. So, for the pound, we are bearish this week. Short-end gilts continue to fall with a deteriorating economic backdrop evident from the UK GDP and retail sales miss from a couple of weeks ago, as well as the labour market slipping in May. And now a potential Middle East resolution, which is going to be reducing price pressures if US oil continues on its downside trajectory. So yeah, from a macro perspective, rates falling, a weak economy, and institutions being overwhelmingly one-sided, which we'll go over now, on the sterling, such as UBS, JP Morgan, Credit Agricole, they're all extremely bearish on the pound. If we look here, we can see 31st. Short positions. JP Morgan are short on the pound. If we come down to the Bank of America, they're actually long on the pound due to FX rebalancing. Credit Agricole, short pound. And who was the other one? UBS, who are short on the pound. So yeah, quite clear consensus among institutions for downside in the sterling, at least for the short term. Moving on to the euro. So for the euro, as pretty similar to last week, it is all dependent on the cross. The short end of the curve in Europe has taken a big hit over the last 2 weeks following weaker than anticipated data, specifically PMI, which is showing a clear deterioration following elevated energy prices, specifically manufacturing PMI, which slipped into contractionary territory. This, coupled with softer US oil prices, has resulted in short end yields retracing by over 8% over the last 2 weeks. However, ECB rhetoric does remain hawkish, like just, I think it was last week. ECB member Kocher states that the ECB faces pressures to hike as Iran war feeds prices. I mean, you can even see up here in the live news feed, Pereira, who's at the ECB, says they must act on inflation sooner rather than later. Obviously, that's got hawkish connotations. Same with Vujicic. I can't even say their names, but the Croatian inflation expected to ease in May. All right, so that's not as hawkish. But if you, obviously, all the users who are on Cognito, if you literally just go through the live news feed in the Euro section or the news section here, and just type in ECB or whatever, you can see that the ECB rhetoric is very hawkish from a lot of the members. Like Stornaras is another member who also stated that an ECB hike may be inevitable to keep credibility. And obviously, you can see here on the rate path, it's a 95.6% chance of a rate increase in June for the ECB, which brings me to my other point, where a June rate hike is already heavily priced in. So upside should be limited, as in it's going to be tough to price in more hawkishness, especially with US oil falling and with a hike already priced in. So you could see some unwinding, which is obviously when you'd go get in for like Euro AUD shorts. But we'll go through that. Institutionally, if we look at the institutions on the Euro, JP Morgan are bullish on specific crosses. So you can see Euro Swiss, they're long, Euro Pound, they're long, same as us. And then Bank of America as well, long on the Euro. So yeah, I mean, you've got some institutions who are long on the Euro, some who are bearish. We're dependent on the cross. We think Euro Pound makes a lot of sense. We think Euro CAD makes a lot of sense for upside. Those are two that we are a fan of for sure. And Euro Dollar, if you Euro Dollar as well for sure. So yeah, that is the Euro. Moving on to the CAD, which I kind of just touched on. But essentially, over the last 2 weeks, the CAD has been one of the worst performers, and for good reason. I mean, yields are softening derived from easing Middle East tensions, leading to softer US oil, but also the fact that the Canadian economy is extremely weak at the moment. The unemployment rate is at a 6.9%. Well, it's at 6.9%, which is a 6-month high, and inflation is at 2.1%, which is a 4-year low, which is quite insane, limiting rate hike prospects, obviously, and supporting continued Bank of Canada easing. Institutionally, if we actually look what they are saying on the CAD, I believe JP Morgan are bearish on the CAD, yeah, as we can see here, as well as Deutsche Bank. If we come down here, they are short on the CAD as well. So yeah, bearish on the CAD. We think it's probably one of the more clear plays this week. So yeah, moving on to the Australian dollar. So, short end yields have had a slight retracement from over the last 2 weeks due to soft economic data. However, the trajectory remains to the upside, with inflation at 4.2%, which is insane, inflation being above 4%, and a somewhat decent labour market. Obviously, it's softened in the last print, but it's still holding up relatively well. The Australian 2 years respecting the 4.5% handle, which indicates to me that this week we could see a slight rebound in the short end supporting the Australian dollar. Couple this with the Chinese yuan continuing to gain strength against the greenback and equities making all-time highs, the AED should remain supported on the majority of crosses. Institutionally, JP Morgan are long AUD CAD. UBS as well remain buyers of the Australian dollar, as they what were they citing? Yeah, they were citing tech-led equity strength. So obviously more from the equity side of things there. So yeah, that's the Australian dollar. Moving on to the New Zealand dollar. Well, we are bullish on the New Zealand dollar. And as mentioned last week, the RBNZ rate decision was going to be pivotal in deciding where the New Zealand dollar goes from then on. And yeah, essentially last week the RBNZ delivered a hawkish rate hold. The central bank highlighted imminent hikes to counter the energy shock, leading to markets pricing in a tighter policy path as the inflation outlook worsened. So you might have noticed that the New Zealand dollar caught a lot of strength in such a small amount of time. And that's because markets adjusted like that super quickly to the hawkish comments, because it's imminent. Hikes are imminent. That's what the RBNZ said. So obviously that then needs to get priced in relatively quickly, which is when you're going to see a lot of strength in a specific currency. And then similarly to the Australian dollar, equities strengthening, supporting the high beta currencies, a stronger Chinese yuan and lower US oil prices should keep the New Zealand dollar supported. Institutionally, JP Morgan are a fan of AUD NZD downside, and Goldman Sachs remain buyers of the New Zealand dollar as well. So yeah, JP Morgan. It's not that one. I can't find with the one where it's where JP Morgan say AUD NZD downside, but I can find this one here. Goldman Sachs are long on the New Zealand dollar. Oh, here, short positions, AUD NZD. So yeah, big buyers of the New Zealand dollar from JP Morgan and Goldman Sachs. Moving on to the yen. So, we are bearish on the yen this week, as we have been, same as last week. The macro points are downside, but essentially as we edge closer towards the 160 handle, intervention risks become much bigger. So you just need to be very careful, but I think you can still capitalise on some yen downside this week. However, if there was going to be a week where intervention fears and rhetoric comes about, it's probably most likely going to be this week or the next week. So yeah, that's that. I mean, if you look at all the institutions in the web app, you can see they're all warning about intervention. So it's quite consensus. Swiss franc, we are bullish. However, it's all dependent on yields. So, I mean, softer yields across the board should continue to support gold and the Swiss franc via proxy. Institutionally, Credit Agricole are bullish, and so are JP Morgan, who are citing real money and systematic buying of the Swiss franc. So yeah, that is essentially where we are at on the currencies this week. Moving on to the technical. So starting off with the US dollar. So as mentioned, I'm expecting this sort of range to hold until we get more clarity on the deal. I think a bounce from this level here, the 99.1, makes a lot of sense. And I think a bounce from here makes sense as well. So it's definitely going to be a ranging market unless we get further clarification on what's going to be taking place in the Middle East, for sure. So yeah, that's the dollar. Moving on to the individual currencies. GA, I think this level here makes a lot of sense. 1875. If not, I think the 1775. So yeah. GU, I like this level up here for sure for downside. We managed to catch that on the Friday. If not, I think this level here makes a lot of sense. Obviously not for a 1 to 0.5. 13525 is what I'm looking for there. If we got on the 6 hour, something like this. Do we make it up here? Probably not, which is why I'm a big fan of this level here. Dollar Swiss, I like downside from this level here, being the 7825 just below it. Dollar Yen, I like upside, but I do want it to come lower. I think getting in around these levels is just really risky at the moment. Lower time frame, you can definitely capitalize on it, but higher time frame, definitely need to be careful. Euro dollar, I am looking for upside, and I think this level here is great. If we can come down to the 161, 100% I'll get in there. Euro pound, lovely position last week. Three are there, 1.5 are there, and then we caught a nice scalp. 1 are there off the offer momentum slowing and more of a quantitative style. But yeah, this level here is screaming to me. The 865, I probably will get in at the 865 just because it's a key handle, which a lot of orders are going to be sitting at. But yeah, great week on Euro Pound last week, which made up for a loss we took the week before when the pound gained a lot of strength from the easing in the long end. But as mentioned on the last week's outlook, we were looking to fade that, and we capitalised on that quite nicely. So yeah, Euro Pound there. Euro Swiss, I'm not actually in this, but I think a rebound into this would be nice for a 1 to 1.5. 912, probably 9125. Yeah. Euro AUD, similar to GA. I think we went over GA. But yeah, the 16256, this level here looks nice. You need to be careful with AUD now because there's obviously slight repricing, but I think something like this would look good for AUD yen for sure. Oh yeah, this we called an AUD yen last week was lovely as well. Did we call this last week? Yeah, we did. Obviously for a nice 1 to 3. CAD Swiss, I want it to come all the way up here, which I don't see happening. So I'm kind of almost going to wait for some new structure to get built. Maybe we get a breakdown, retrace here, then we go like that, something like that. Swiss yen, similar thesis to dollar yen. I want it to come down to the 2025. Dollar CAD, similar thesis. I think we can definitely get a nice long here. Yeah, for sure. Actually, what level is that? 1375. I'd even put my limit there. But yeah, that's what we're looking at on dollar CAD. G Swiss, similar to Euro Swiss, or was it? Yeah, dollar Swiss and Euro Swiss. Looking for downside from here. AD CAD longs here make a lot of sense. NZD CAD, same thing. However, we're very overextended. AD NZD shorts there. However, I do think these are two levels we can get a slight retracement. The 1915. And the 119 essentially. So yeah, these are the levels I'm kind of looking at for slight rebounds. We can capitalise on obviously lower time frame scalps. Otherwise, I want to get in here for short. NZD yen, similar thesis. Want it to come down to the 94. GN 2275. Euro NZD, definitely more aggressive this entry here. 1953. ES, I like this level here for longs. If we break through that, I'll be looking to get in around the 7525. So yeah, this is essentially everything we are looking at this week. As always, drop a comment, drop your outlooks in the Discord, and I'll catch you in the next outlook.